Hi, and thank you for joining us for our market update video, where we'll try to give you a relatively quick overview of what's been happening in the financial markets, in the economy, and an indication of where they might be headed. My name is Jason Gunkel, and I'm the Chief Investment Officer for Syverson Strege, and I help lead our investment team. So I'm sure many of you opened your January and February statements and had a sense of relief that the markets have rebounded after a difficult fourth quarter. And through the middle of March, in fact, the US stock market is now up about 13%, and the international stock market is up over 10%. So what have been the major reasons for this turnaround and renewed sense of optimism? Well, first, in January, the Federal Reserve met, and they seemed to indicate that they would not raise interest rates for the remainder of the year. This helped to start the market recovery. Then there seems to be a renewed sense of optimism with international trade, and more specifically with the US and China. They seem to be inching closer towards a trade agreement. And also, unemployment numbers continue to be very strong. So unemployment now has reached under 4%, and jobless claims more recently that have been released in March have reached a 5-decade low. So while there have been many signs of optimism in the markets, there's also some signs that the global economy is slowing and that the investors may want to exercise some caution. So the housing numbers and manufacturing numbers that have been released in March have showed signs of decline. And new home sales are down about 7% in March. And there's no doubt that this is linked to the rising mortgage rates. A 30-year mortgage is now about over 4.5%. Also, while earnings from companies have been very strong, there's also signs that they may have peaked. Profit margins are at record highs. And while earnings growth was about 12% in the fourth quarter, the projections for this year is that they're going to be relatively flat or between 0 and 3% growth. Now, by almost any measure, it seems that the US stock market is overvalued. And there's been some disagreement about how overvalued the market is, depending on what measure you look at. But there's general consensus among market experts that the market is very expensive. And this would make sense because the US stock market now has had its longest bull market run since World War II. And our last recession was over 10 years ago in 2008 and 2009. So it would make sense if the market is due for a correction. We are telling investors that it would be wise to be a little more defensive with their portfolios and maybe trim some of their gains, rebalance their accounts, but most importantly, they should stick to their long-term financial plan. So if you are a current client of Syverson Strege, we thank you for your continued trust in us. And as always, if you have any questions, please feel free to reach out to us and your planning team. If you're not a client of Syverson Strege, we encourage you and welcome the opportunity to sit down and talk about your unique situation. Thank you again for joining us today.